If you're planning to buy a home or a car these days, the process may be a lot tougher without an excellent credit score and a significant down payment. So that means you're going to have to work harder and possibly wait a little longer to make those important purchases. It's particularly important to make sure there are no skeletons in your credit closet. High levels of debt combined with a global credit crunch have tightened up lending to all but the best customers, and even some very credit-worthy customers are having trouble too. If you have extraordinarily high debt levels, a record of late payments, or very little money to put down on that home or car, you need to do some advanced planning before you contact any lenders. Here are 6 things you should incorporate into your planning so you'll be ready to use credit wisely when the time comes. Number 1, get some advice. You might be focused on paying down debt or saving up for a down payment on that new home or car, but credit is only one part of your lifetime financial picture. It might be a good idea to talk with a qualified financial professional to learn how to best use credit. It's always good to determine what your limits should be and to understand the rules of the credit game. Number 2, pay down the balances you have. The Fair Isaac Corporation, the company that created the FICO score, has adjusted the way it computes its credit scores. One of the top changes is a greater negative weight on what they call credit utilization, how close you get to the borrowing limit of each of your accounts. The Fair Isaac Company says that for optimal scoring, each account's outstanding credit should be no more than 50% of the credit line, and hopefully less. Preferably less than 30% of your total available credit. By the way, as you're paying down your balances, it's wise to focus first on the highest interest rate credit cards or loans. This will help reduce the overall amount of your payments that go toward interest and not toward principal reduction. Number 3, set a credit report review schedule. You have the right to get a copy of all 3 of your credit reports from Experian, TransUnion, and Equifax once a year for free. These 3 companies are the major players in the credit reporting world. You can get a free copy of your credit report by ordering them at annualcreditreport.com. You may want to consider not ordering all 3 reports from each of the 3 companies at all at the same time. By spreading out the dates you receive each of your credit reports, you'll get a continuous view of how your credit picture looks over time, because the 3 credit bureaus feed each other the latest information on a continual basis. It's a good way to catch errors on your credit report and to keep a steady watch for identity theft. By the way, be careful with all those ads you may see to advertise free credit reports. Many of them will demand a credit card number from you, which means at some point those reports won't be for free. There are several websites that offer free or low-cost credit reports. Some even offer credit monitoring services to alert you about changes to your credit score. These monitoring services may charge a fee, but it might be worth it to stay on top of your credit reputation. Number 4, pay on time and pay more than the minimum. If you've been late with payments or have stuck to only paying the minimum payments, it's time to give that up now. Here's what you should do. To avoid late payments, note the due dates when the bills arrive and then set a date for payment 5 to 7 days ahead of those due dates, so you'll definitely be able to mail your payment on time. Another option is to pay online. This payment method avoids a payment getting lost in the mail or arriving late. Many banks even offer guaranteed on-time payment schedules as a part of their online payment services. Still another option is to have payments made automatically from your bank account. Most credit card companies and many other lenders offer this service, and most of the time it's free. To put more toward reducing the balance, it may be time to do a budget or to fine-tune the budget you already have. This will help you identify the non-essential spending you've been doing so you can pay down your outstanding credit balances even faster. Number 5, cut up your cards, but don't close the account. Closing accounts, even those that have had 0 balances for years, is a bad idea. Lenders want to see a long record of responsible credit management, and long-time accounts that you haven't touched in years may actually help your score because it shows you have some restraint in the use of credit. Number 6, no documentation or low documentation loans. Find another way. If you're self-employed or otherwise don't have a lot of easily verifiable income, you may have trouble getting a loan. A potential lender may demand you do a lot of extra work to get the documentation they need to approve your loan. So if you're self-employed, be sure to keep good income records so you can document your income to a potential lender. The bottom line here is the days of easy credit are virtually gone, and they may not come this way again for a long, long time, if ever. Take the time to stay on top of your personal financial affairs. Use credit wisely. Seek guidance from a trained professional to help you keep your financial life on track so you can live your life on your terms. And join us again soon for another installment of The Financial Briefing.